Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Whirlpool, which could become a multi-bagger going forward in the next 3 to 4 years. So let's understand how the management and the numbers are, and let's see what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Whirlpool, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and also a number of podcasts that I put up from alternate days on Patreon on different stocks and also markets. If you need detailed market analysis or company analysis for a number of stocks, you can directly email me and we can work things out there. Now about Whirlpool, the company was formally established in 1911 in USA and then established in India about 30-40 years back. It focuses on providing white goods such as washing machines, AC, etc., and they are the market leaders in top door washing machines and currently selling a huge amount of it in India and abroad. They also manufacture refrigerators, microwaves, and kitchen accessories for a small amount, but most of their business is centered around washing machines. It is the biggest consumer goods brand here in India because it is very well renowned and respected across the board. If you look at the financials of the stock, then the sales were flat for Q4 of FY20, whereas the profit dropped by around 16% in Q4 itself. So we saw a little bit of effect of the shutdown that took place in the second half of March. Plus, the demand was also slackening as we have known in 2019, and it continued in 2020, and that had the effect. It is a completely zero debt company altogether. Return on equity of 21% and an operating profit margin of 10% is fine, but not extraordinary. It is better. It is performing better than most of its peers at the moment. So why the euphoria around, say, such a stock like Whirlpool? So moat and leadership in something like washing machines and the technology that they have built over the years. So they have been a market leader in this space for the last at least 20 years or so. So from late 90s till today, Whirlpool has emerged as market leaders in new and state of the art washing machines, especially the top door one, which is quite which is sold quite a lot in the medium to lower income group people as well, and even in the front door washing machines they are up there along with IFB. So IFB is also there in that front door washing machines, but Whirlpool is also doing its bit there. So that's there. Strong return ratios has improved over the last 4 5 years, and I've seen the stock grow many folds from around 300 320 levels that it was trading at earlier. Management is top class. There is no doubt about the management or their pedigree, etc. Absolutely no debt, and they don't take in debt, and they expand through the cash that they have in their reserves, decent dividend that they pay, etc. Business, the longevity of business is always there, so there is no you can say cyclical play in here, or there is no you can say doubt or fear of the business going away after a couple of years, that something that has you can say outside thing that has helped, or external thing that has helped the business. It is not that. It is a consumer business. It will continue to grow just like an FMCG. So the penetration of washing machines, etc., is extremely low across India, and that will continue to grow as electrification continues to become better in rural and semi-urban areas. Quality is selling at premium today. There have been a decline. So to 2500 2600 has become 2000 2100. There have been a 20% decline in the stock price. currently trading at around 50-55 times normal earnings, FY22 earnings. Yes, expensive, but it will continue to be expensive because of the kind of leadership that it has in the washing machine segment. If you look at the performance then of the stock peaked in February at around 2550, and it saw a sharp decline in February, March, and declined to as low as 1400. So the decline was around 40% from those highs, and those were very interesting levels to get into Whirlpool. It has come back sharply from those lows of 1400, and now it is trading at 2000 at the moment. And we saw a sharp move right on Friday in the stock of 6-7%. So there could be a chance that we are just starting a huge move on Whirlpool from now on in, as people believe that the unlock theme is going to begin, and companies which were not doing well for the last 6 months will continue to perform better. I have different opinion about it, but the markets believe that FY22 onward things would be better, so let's start buying now. That is the case. There have been pressure on earnings for once, after a long time there have been pressure. So it has been 4 5 years, 20 15 to 20 quarters of very good performance, and then there has been a pressure. Numbers have always remained robust, but in the last 2 quarters, this quarter will not be that great, and it has not been. They have had losses, and the last quarter has not been, but otherwise numbers have been very good. High promoter and institutional holding is there with only 8% free float, and that is pretty good in something like a Whirlpool. If you look at the stock technicals, then there's strong support around these 2150, 2175 levels, and this is where it is. So it went below it, it went to around 2000, 2050. Now it is trying to go up there. So any levels above 2200, 2200 is a good buying opportunity. The next support lies at around 1850. So what you can do is keep a stop, long-term support or stop at 1850 and buy at current levels, and probably you can see new highs coming in a year's time. It has been consolidating, so I did make this presentation just few days before, but on Friday it has shown a breakout from the consolidation. So if you are a short term player, then keep a stop loss at 2080, 2060, the 50 DMA, and probably trade into the stock for a target of 2500, 2550. Major breakout is expected above this 2500, 2550 region, where the stock could even go to 4000, 4200. So these levels are very good to buy, just that you have to have a good long term time horizon of 3 to 5 years and just accumulate the stock on each dips. So what needs to be done? In my opinion, it is a buy with close to 2000. So about 3 4 days back, it was a very good buy at around 2000, 2050. Even now, it is not that bad with a stop loss at 2000 or 2050. This is a market leader and can continue. I mean, in the next 6 years, it can easily be 5 6x. It can easily be 4x at least. I mean, the thing is, it is growing. The stock should grow at 20 to 25% yearly, and probably in 4 years' time, 3 and a half years' time should double, and then even double from there in the next 3 years. So in the next 6 years, you could see 4x on the stock, and this is the kind of, you can say, multi-bagger that I am looking at, not a 10-20 bagger that everybody was thinking at. Hard to trade such stocks in this kind of environment. It is a top long-term buy for me. For 5 6 years, you buy and hold the stock, it will do extremely well. So this was my video on a Whirlpool. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.